Hi everyone, welcome to another weekly Forex forecast for the week ending February 21st. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to discuss the EURUSD, the Pound USD, the Dollar Yen, as well as the Pound versus the Canadian Dollar. And we're going to wrap things up with the Canadian Dollar against the Yen. I do think the Canadian Dollar could be one to watch in the days and weeks ahead, especially as the Pound versus the CAD is leaning on a wedge support that could give way to lower prices. So let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. First up, we have the EURUSD, and as you can see, the pair did continue its descent last week and even broke below that 109 area. So this breakdown back here of this ascending channel is something we had been monitoring for weeks, and you can also see how we have this larger descending channel that extends from this 2019 high back here. So as I mentioned a few weeks ago, this breakdown below ascending channel support would likely trigger a rotation lower. Now, nobody knew how fast this would unfold, but as you can see, it has been relatively aggressive. Now, if you saw my post from last week on the EURUSD, you know that this 108.25 level could be a support level for this week. So on Friday, if you noticed, the pair did bounce from 108.25. In fact, if I move in here to the 1 hour time frame, you can see how Friday's session did catch a bid right there from 108.25. So that is a key support level for the week ahead. And it's also a level that has to break down in order for the EURUSD to continue lower and perhaps test the bottom of this descending channel that's been in place now for several years. So it's going to take a daily close below 108.25 to expose the bottom of this channel and perhaps that 107.24 gap from April of 2017. So I mentioned this several weeks ago where the April 2017, that was the French elections gap at 107.24 could serve as a magnet over the coming days and weeks. That gap has yet to be filled right down here, so we could see a move into that area over the next few days. Just keep in mind that right now the EURUSD is a bit overextended, and you can see this by the 10 and 20 EMAs, how far above the current price they are. So if we do see a rotation higher from 108.25 back into 109, that could present a selling opportunity depending on what kind of price action develops there for that continuation down into this channel bottom, which could intersect with that 107.24 open gap from 2017. But all in all, I am going to stay bearish here as long as the pair is below 109 on a daily closing basis. Only a close above that area would expose 109.90, which was a factor back here as well as this low recently. So I'm going to stay bearish while below 109, looking for a move down here into this channel bottom, which again could intersect with that 107.24 open gap from 2017. The British pound versus the USD, or GBPUSD, was a bit frustrating last week in the sense that we had this breakdown below the November 2019 trend line and also the bottom of this 2019 ascending channel. So this breakdown right here on this Monday closed below that 2019 trend line, and then a few days later we did get that break below ascending channel support. Now, I had been discussing this area right around 129.80 as a resistance level, and you can even see where Wednesday of last week formed a small bearish pin bar. However, Thursday's candle not only took that out, but also retested this region between 130.50 and 130.70. But as bullish as last Thursday and Friday looked for the pound, keep in mind that the pair is still below that confluence of resistance between 130.50 and 130.70. So until the pair closes back above this area, I have to stay cautious here and even perhaps relatively bearish, just in the sense that the pair is still below this region. Now, if we do see bearish price action develop this week from this area, that could hint at a rotation lower back into 129.80 and perhaps even down here into 127.70. Now, alternatively, if we do see a close above that 130.70, it could be as high as 130.80. That would expose this 131.70 level up here. But just be really careful with the pound this week, because again, until we get some kind of bearish price action from that 130.50/70 area, this pair is in no man's land right now. Because as of right now, yes, the last 48 hours of last week looked pretty strong, but again, it's below that resistance area. All right, so any kind of bearish price action from there could trigger a rotation lower, while a close above 130.70 could be as high as 130.80, would expose higher prices, including that 131.70 level that was a factor earlier this year. So I know a lot of you have been asking about the dollar yen, and to be honest with you, the pair isn't doing a whole lot at the moment, but I wanted to provide an update simply because a lot of you took an interest in it and have been asking for my opinion on where this pair might be going. Now, in my opinion, as long as this ascending channel is intact, it's going to be difficult to find follow through here. So yes, this is a short-term uptrend within a broader downtrend, but right now with this pair just moving sideways, it's a difficult one to trade. And to be honest with you, I have no interest in the dollar yen as long as this channel is intact. Now, ideally, given the broader downtrend here, and also the fact that this is an ascending channel, I would like to see an eventual break of this support level for a move perhaps down here into 106.80. It looked like we were going to get that breakdown back here during this sell-off, but the dollar yen has been resilient. And again, right now, it is just moving sideways within this short-term channel. Now, alternatively, you could also look for a short up here at this channel top, which could coincide with this 111 level. Now, I would put this resistance area between 110.80 and 111. So any move up into this area could produce a short opportunity for a move back down here into channel support. But alternatively, as I just mentioned, a move down here into channel support followed by a close below it could open up lower prices, including 106.80. But as of right now, I do think that the dollar yen is one for the watch list only, simply because we have no momentum here. There is no directional bias at the moment, even though the pair has been trending higher for several months. So until this channel breaks down, I really don't have an interest in this one, and I also think there are better opportunities out there. So I wrote about this British pound versus the Canadian dollar rising broadening wedge a little while ago, and I noted how this is an exhaustion pattern for buyers. So a broadening wedge like this is different from a narrowing wedge in the sense that this wedge right here could theoretically go on forever, whereas a narrowing wedge comes together where price gets squeezed and the market is forced to make a decision. So as it moves closer to this terminal point right here, it is forced to make a decision and move either higher or lower. In this case though, we're dealing with a broadening wedge, which means that there is no terminal pattern. That said, what I mentioned recently was that this could be a potential lower high from this high back here. And if that's the case, this would be the first lower high in this series, in this uptrend. So if that is a sign of weakness, we could see the pound CAD move lower. However, if you read that recent post, you know that a close below this wedge support down here is required in order to confirm the idea. And notice too how last Monday did bounce from that wedge support. So this is the same level I had drawn in my commentary from last week. And notice where this low did catch a bid and even rallied, especially on Thursday and Friday. So just like the British pound, this is kind of a waiting game right now because we are waiting to see if we get a rotation lower back into wedge support followed by a close below it. Now, as long as this high up here is in place, the idea that this is the first lower high in this series is intact. However, that does not mean that the pound CAD is going to move lower. There are no guarantees, and until we get a close below this wedge support, this uptrend is very much intact. So I'll be keeping a close eye on the GBPCAD in the coming week and provide updates along the way, especially if we get a daily close below this wedge support, which is currently somewhere near 1,7200. Last but not least, we have the Canadian dollar versus the Japanese yen. And I wrote about this one last week and also commented on this potential inverse head and shoulders within the members community. So notice how we have this left shoulder back here. We also have the head and a right shoulder. So this pattern developed on the 4-hour chart. And to be honest, I'm not a big fan of trading head and shoulders patterns on the intraday timeframes. I typically stay on the daily when looking for these patterns. However, given the fact that the pair is coming out of this trough and also tested that 8160 level that I mentioned several weeks ago as a key support following this breakdown back here, this was a pattern that was on my radar. Now you can see where this neckline was tested as new support last week. However, the pair has had trouble gaining any kind of bullish momentum. And that's mostly due to the fact that this open gap back here, and I mentioned this in last week's commentary, that the CAD yen had to close above 8,300/10. Notice how this high up here is right at that 83.10 mark. So until we get a close above this area, which again was this open gap back here, it's going to be difficult to find follow through here. Now at the same time, as long as this neckline is intact as new support, this pattern, all right, this inverse head and shoulders pattern does have a chance at playing out. But ultimately, if you weren't able to get in at a favorable price last week during this retest right here, it may be best to wait on the sideline until we get a break, a confirmed close above 83.10. Because again, this was the gap back here. You can also see how the CAD yen stalled out last week right at 83.10. So if you're not in this one yet, it may be best to wait for a close above that 83.10 level, which could expose that measured objective that I mentioned last week up around the 84 handle. That's based on the height of this inverse head and shoulders pattern and is also in line with the bottom of this ascending channel that we've been discussing now for several weeks. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.